Okay, I want to show you how to create a profit and loss statement. First of all, I want you to look at the bank accounts over here. I'm going to give a sample of bank accounts that cover all of the different options that I believe could exist in bank accounts and credit cards. Here is going to be the name of the bank, and the reason why I have this over here, it doesn't matter if it's Chase or Wells Fargo or any other bank. The difference is going to be Amex has a unique way of exporting its transactions. Essentially, they export in the negative or the opposite way that other bank accounts or other credit card accounts that I've seen export. That's essentially it. Business or personal, and these are just identifiers. These columns over here, this right here is just an identifier for later. You'll see when we combine the different accounts. These are the direct exports from the bank or the credit card. Essentially, you should use the posting date, the date that it posts to your account, use the description and the amount. So this is a bank account, a checking account, as you can see over here, account 1234. It's a checking account. And so this number positive is money going in to the account, as you can see here from online deposit. So this is a stencil that I put together to make it somewhat easy to put together a profit and loss statement, a rough profit and loss statement, just using your bank accounts and credit card accounts. These right here are from a drop-down menu that are actually pulled from this tab. So if there is an account that is needed that's not here, for example, let's say this Zelle payment right here was for, I don't know, a foot massage that is, for whatever reason, it's deductible for the business. Then let's say you put foot massage, it's not there. So you would go to this other tab over here and put it here, foot massage, expense. And then when you go back to this tab over here, you can put in foot massage and it's there. Okay, but we're going to just take out foot massage. That was just to show you, because foot massages are not deductible as far as any reason that I can think of. So once you paste these items over here, these are going to be blank. Now when these are blank, so these right here are formula based. So this is going to take the month over here and the year is going to be pulled over here. So as you can see, here's September. It's being pulled from right down here. And then these amounts are being taken from there directly from the export that you pasted in here. So I'm going to just reverse that. So what I did, oops. So, right, you're going to go through here and you're going to select, this is going to be revenue, this is going to be a mortgage payment, which essentially is a loan payable, right, because you're reducing your loan payable over here, reducing your mortgage. So I'm not going to, I already did this. I'm not going to spend the time right now to go through each of these, but essentially what you would need to do is go through each of these descriptions, determine what the expense is, assuming it's an expense, or what the transaction was. All the negatives are going to be expenses. The positive is going to be money coming in. So it could be a transfer. It could be revenue. You have to determine what it is. If it's a transfer, then that means it's going from one business account to another business account. So even if it's paying a credit card, so in this case right here, let's say you're transferring from one account to another account. That would be a transfer over here. That's not going to be an expense or a withdrawal or a contribution. And then as far as the loan payables go, just a caveat is that this is typically going to be a combination of principal and interest. So for simplicity, I just put it under loan payable over here, which is okay for now. When it comes time to file your taxes, the only deductible part is going to be the interest expense, potentially, assuming it's for business, or it might be deductible on your Schedule A as an itemized deduction if it's your personal residence. Now, keep in mind that over here, the GL account type is going to be what type of expense or revenue or item that's going to be showing up on the balance sheet. So over here, for example, liability, it's going to be a balance sheet item, not a profit and loss, not an income statement item. Unlike these ones, these expense and revenue, these show up in the profit and loss statement. A transfer is not applicable, as you can see. And then finally, we have over here the business. If you have multiple businesses, let's say myself, I have an accounting business. Let's say I have a property also, I have rental property, and I'm using the same bank account. It's not ideal to use the same bank account for two different businesses, but this spreadsheet, this stencil over here allows for that. You can essentially identify which business it relates to. That way I have revenue over here. That way you can separate them out by business. I think that's all. And then these right here, like I said, they're just formulas to be used. It's going to be helpful later once I combine all of these different credit card and bank accounts into a merge, into one tab. Forgot to mention I have this filtered over here, personal. There were a few personal items, so I indicated personal right here. This is just an example, but this should not be accounting. It doesn't matter. There's no business purpose. There's no business that a personal account would relate to. So I just filtered out, once I completed this sheet right here, I just filtered out for personal, and I have these items right here. That's the first tab of the accounts, and then we're going to go ahead and move on to the next accounts. Okay, so now to look at the other accounts. Essentially, they are all going to be very similar. If here, bank account 2345 is only for business, so it's going to be almost identical. They're just going to all be business related. The GL account here that you select, if something is not on this list, you can go here to the GL accounts. Let's say this right here was a payment for electricity, right? And you wanted to put electricity here, and it's not. You start typing it and it's not in the list. So you should be able to start typing and whatever is on the list will pop up here. So let's say electricity is not there. So I'm going to go over here and I'm going to copy this, but instead of gas, I'm just going to say electricity. And I'm going to put the type of account it is, an expense account, not a revenue account, etc. Now I can go back over here and I can start typing in electricity, and then it automatically changes this GL account right there as well. So that is the account we're going to select over here, and this is the business. Let's say electricity is for real estate. Whatever that address is, I can select that specific. If we want to remain consistent, it'll be 123 Main Street. So we'll say that, 123 Main Street. Then the similar thing is going to be happening. We're going to do the similar thing for Chase credit card. Looking at the bank account, you have the Chase credit card of 3456. All very similar, identifying that these are all business related. This is the general ledger account, the GL account. This is the business it relates to. You can add notes over here, and then these are automatic. If you have a tick mark of some sort, something that you want to address individually or put a note to yourself, you can put a letter right there. And then you can go to this tick mark tab and put the letter A, and you can say blah, 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 note. You can take a screenshot and put it there. That's pretty much what that is for. Now, moving on to the last tab over here, as far as the last bank or credit card account. This is going to be slightly unique because it's an Amex. Now, Amex has, if you see over here, interest charge is $64.72. What's the difference between these charges? You see this is a negative right there. And the difference between these charges and these charges. If you saw that these are negative because you're charging something, you're going to be paying money, and in Amex it is not negative, they're positive, you would be correct because that is the way Amex does it. So this is still a charge. This is essentially the same thing as charging $64.72 on your Amex credit card. So therefore, in order to have things be consistent, over here, the formula is going to be simply directly that charge from the amount column D, whereas for the Amex card, it is going to be, I made it a different color, it's going to be the negative. So we want to make sure that we are staying consistent. That essentially is the only difference between the Amex and the other accounts. So just want to make sure you have that in mind. Now what we're going to do is we're going to take all of the bank and credit card accounts, put them in this merge for pivot, which I did already. You'll see here the 1, 2, 3, 4, 2, 3, 4, 5. Now we only want to include the business ones. We could include the personal ones and then exclude them out, but it's just going to be easier if we only include the business ones. So if we were to add up all the number of transactions, there's 41 transactions. Well, let's just do it by a card to make it easier. These are 9 transactions, and I'll add up the amounts. This is 1126.19, and if I add these up, that should equal 1126.19 and 9 transactions, just so we can see that we have completion. Here, 2924.19, 11 transactions, 2924.19, 11 transactions, 2924.19, 11 transactions. Okay, so essentially that is what that merge for pivot. We're merging them to get it ready for a pivot. And here we're going to have 4786, and etc. We'll have 184.82, 4786, 184.82. So this should have the entirety of all of the accounts. Now what we're going to do is we are going to create a pivot, which I did over here already, but I'll show you how to do it right here. We're going to go insert pivot table. Now you'll see that we have the default is going to be, it should be the entirety of all of the data. And then I'm going to select, it's usually defaulted to new worksheet. I'm going to create this new worksheet, and that's what this over here is. It's a new worksheet. Now, I already selected over here, we have the amount, the GL account, and the GL account type. So we're going to have the amount, the GL account type, and the GL account. So the GL account right there, and the GL account type. Now the reason for this is because this is the GL account type. So we want that to be on the higher level in our table. Just going to do a little bit of formatting over here. And then so we see here that the total expenses for the period of time, whatever period of time that I have these accounts for, and this can be done on an annual basis, on a quarterly basis, on a monthly basis, or as frequently as you want. Just make sure, I would highly recommend to have it be accurate, make sure that the dates are going to be consistent between accounts. So if you're going to be doing it quarterly, make sure that you're doing it quarterly for all of these accounts and credit cards. So essentially what we see here is that there was a total of $1,837 in charges during that period of time for all of those accounts. Loan payable of $15,699. That's a liability. So that is going to be reducing your payable, right? Because you're reducing your liability over here, and the payable, the mortgage, the loan was being paid. as we can, if we recall over here, this is a loan payable, which is a liability. So there's a mortgage over here, and there are payments going out in that amount. So now you will notice that there are going to be interest expenses that are not going to be included on here. Even though there is interest, this is a different interest. It's likely going to be interest for the cards, credit cards. However, interest on the mortgage payable will have to be broken out or taken from the statements, and then it will reduce this number, because this 15,699 out of that amount, probably let's say 10,000 was for the principal and the rest of it was for interest, but that would have to be determined via the statements. And then here, transfer, this is neither a no income, not an expense, not a balance sheet, it's simply a transfer. And then revenue of 15,866. Now if you want to see what makes up each of those, which I'm actually kind of curious why there's a positive $9, positive $108 in software, this should be all negative. So I'm going to double click inside of here, and I'm going to see what's going on. Looks like, what are these? This is from account 4567. So this looks like it is from the 4567. Interesting. So these two are revenue and transfer. Why are there negative accounts? Let's see, this is saying detail 1, saying there is a bill and Ring Central, 4549 and 4123. 4549 and 4123. Now why are they showing up over here? Are they positive? Yeah, for some reason they are positive. You know, it looks like when I did 4567, I did not correctly paste the negatives. So what I'm going to do, I'm going to redo that. So it's important, as you can see here, to look directly. Let's see, what am I pasting over? So I'm going to do it again without the title column. So I paste it. I see. So what I'm doing, I'm incorrectly taking this amount right here instead of this amount. So I should be selecting, I need to rename this to be amount 2, and I probably should do that throughout, just to be consistent, because as you probably noticed that it was pulling the amount from the first column D, not from column L, which we want it to pull specifically because of the Amex. So I'm going to go over here to the merge for pivot, and I'm going to go here to the, this is the pivot. So what I'm going to do is I'm going to delete whatever we don't need, delete this right here, delete this merge over here, and this is our pivot. And I'm going to refresh. I'm going to pivot table analyze, refresh it, and I'm going to, instead of this sum of amount, I'm going to go amount 2. Sum of amount 2. Now we see that all of these are negative. That's what we would have expected, 2381. So if we want to know what our revenue, just our profit and loss statement, right? What we can do is we can say this is going to be our P and L. And we're going to take our revenue right here, paste it right there, and then we'll take our expenses right here, expenses, and that's it. Then we can do the net income is going to be the difference, equals the revenue, and because it's negative, we'll just add it together, and that equals 13,589. This is our net income for this period of time. That's essentially it. That's what we would need, as tax preparers. And as long as these categories are in a way, in a clear way that they can be included on the tax return, this would be perfectly sufficient for preparing your tax return. Most important is somebody competent doing this, and having you as the business owner having the confidence, reviewing the work and knowing exactly what is inside of it. So if you have somebody prepare this for you, make sure you go to the pivot and you look here. Charity, does that make sense? Yes or no? Interest, does that make sense? Licenses, yes or no? Marketing, do all of these make sense to you, the number and what it is labeled as? Plumbing, if you say, hey, why do we have $390 in plumbing? I never hired a plumber. Then you should make sure you fix that. And you can just double click into it and you can see these are the amounts. Does that make sense? One thing I forgot to mention is, what about the different businesses? So one thing you could do, if you have 2 different businesses or 3 or 4, is you could go to the business right here. I could put it to the filter. So if I want to only see the accounting business, I click on that. And then we see the revenue and the expenses only related to the accounting, and vice versa. If I want only for 123 Main Street, I can just click on that, and that will tell me the revenue and the expenses related only to that business. And you can copy and paste into a separate tab. You can say P&L for accounting, P&L for 123 Main Street, or whatever property, or whatever number of businesses. If you have any questions, please send them my way. I hope this is clear and hope this is a little bit helpful. Again, this is for somebody who's doing the accounting by themselves, not currently using QuickBooks or another accounting software. This might even be preferable in some ways to using QuickBooks and hiring somebody to do that. It's up to you. That's your operational decision, but I just want to share this with you as a possibility, as an option, and as a way to have your financials tax ready to prepare, ready to give to your tax preparer without too much investment in terms of finances, and also just to enable you, if it's helpful, to have an understanding of how it works and how it's done. Look forward to hearing from you. Let me know if there's anything else that you feel would be helpful in having your business up and running, or to have your finances ready for the tax folks, or if you have questions about taxes.
iTwist.io